Welcome to Wrap the Month, January 2024, where we show you the markets in 11 charts. Let's go. All right, so we had a mixed start to the year in January. S&P 500 was up 1.58%. The NASDAQ was up 1%. Small caps are off 3.81%, and the Vanguard total bond market, which represents the bond market, was off 0.17%. So kind of a mixed bag. S&P 500, NASDAQ stocks good. Small caps, bonds, small caps down. Bonds down a little bit. So as we get into it, S&P 500 up 1.58%, our spider. SPY is in all of our retirement accounts. RSP is our equal weight. That was off 0.84%. In January, Vanguard dividend appreciation up 1.22%. Schwab small cap off 3.81%. As we've mentioned, Vanguard total international stock down 1.71%. International small caps down 2.84%. So international's down for the month. Short-term bonds were up 0.31%. Longer term to mid-term bonds off 0.17%, and our international bond was off 0.58%. Let's jump into the 12 months overview. So basically how the markets performed the past 12 months from the end of January of 23 to how we're doing now. So S&P 500 is up 22.37% during the 12 months. NASDAQ is up 33%. Small caps up 5.68%, and bonds are actually positive for 12 months at 2.57%. S&P 500 during that 12-month time up again 22.37%. That's SPY. Big discrepancy, RSP, which is why you saw some changes in our models. We sold RSP in all of our retirement accounts because that does not create a taxable event when we place trades and sales and realize gains. We got out of RSP and got into SPY. For some of these reasons here, you can see SPY the past 12 months has outperformed RSP by a sizable number. So 22.37 on SPY versus 6.73 on RSP equal weight. Vanguard dividend appreciation, 14.2%. Schwab small cap, 5.68%. International Vanguard, 5.31%. International Schwab small cap, 2.51%. Vanguard short-term bonds, 4.19%. Very different look than the previous 12 months. 4.19% on the bonds, 2.57% on our total bond intermediate bond market, and international bonds, 5.95%. Year-to-date market overview. Again, the year-to-date is exactly the same as what we did in the month, so we're going to pass this chart for that. S&P 500 market breadth. We can still see here we're trading above the 50-day and the 200-day moving average. Positive trend there. Positive long-term trend on a technical analysis basis. RSI's come off a little bit. We're down to 57% from up over 70%. Of stocks above their 50-day moving average has come down a little bit from the high. We're at 66%. Of stocks above their 200-day moving average, we're at 71%. NASDAQ, very similar story to what we just looked at with the S&P 500. We're trading above the 50-day and the 200-day, represents a positive long-term bull trend. Relative strength has come off a little bit, down from over 70 to 52. Stocks trading above the 50-day moving average here, we've got 47% above the 50-day versus 45% above the 200-day. Okay, now let's look at value versus growth. As we've seen, value represents different trends in the market versus growth. Value underperformed growth by 2.32% in the month of January. As you can see here, the Russell 1000 value was basically flat, while the Russell 1000 growth was up 2.43%. Offense versus defense. We have here offense versus defense. Consumer discretionary greatly underperformed consumer staples by 5.62%. So for the month of January, discretionary was down 4.42%, while staples were up 1.26%. University of Michigan, our famous consumer sentiment, what the folks out there and investors think of the market. 79% consumer sentiment continues to rise. Yield curve, we are still inverted. As you can see here, the yield, this line here is below 0, which means we have an inverted yield curve, which means we are getting paid more to be shorter on the fixed income on the bond curve. And we're off by about 0.2%. This chart will show it better. The 10-year is yielding 3.99%, while the 2-year is yielding 4.27%. So the green 10-year, in normal environments, this green line would be above the red line, meaning 10-year yields, 10-year treasuries are yielding more than a 2-year treasury, right? Because normally you get rewarded for going longer out on the curve, but we're still inverted. So it's not as great as it was. See the gap here, but we are still inverted. Same exact story, even more so with the 3-month versus the 10-year. The 3-month is yielding 5.42 versus the 10-year yielding 3.99. Well, there you have it. January 2024 wrapped the month. Let's hope we have 11 more positive wrap the months. Will that happen? I can confidently say probably not. Till next time, see ya.